Breaking news, the SEC greenlights more Bitcoin ETFs, signaling a new era for crypto investors. Hold on tight as options on Bitcoin ETFs might hit the market. Could this push Bitcoin to 150,000? Stay tuned for the unfolding crypto excitement. Don't forget to subscribe, like and share, and let's start. And we're starting off with a small meme, class of 24 trying to accumulate a whole coin before the halving. And yeah, all of us were so fucking close. Next up, Bitcoin is not about having conviction, it's just a rational sinking. Also, Bitcoin successfully retested the key support area over the weekend as the uptrend remained strong, and I've got my eyes on $60,000 neck. Let's see if it plays out well, but still we have not seen any movement on the Bitcoin for a whole week and the consolidation continues. Let's see what's next for us. $5 trillion asset manager Fidelity goes big on Bitcoin. Fidelity and Accenture hosted a 100 bank executives and asset managers in Paris last week to learn more about Bitcoin. If Bitcoin goes above the 52,200, over $1.6 billion in shorts will be liquidated. Bitcoin is the critical resistance zone, and I'm expecting a retrace from this zone to around $44,000. And as we could see, some people are bullish for 60k and some are ready for a retracing position for the $44,000, and we can tell which actual movement we will see. The chart is showing weakness. My problem is that buying alts here is a very risky venture as most will dump on Bitcoin's sharp retracement, and best bet will be to buy the deep and ride the new high. If you could have been something marvelous, if you want to do your shareholders a 100 billion favor, convert the Tesla balance sheet from USD to Bitcoin, and other firms on the S&P 500 would follow your lead, and in time it would grow to become a $1 trillion favor. And Elon Musk goes with, are such large transactions even possible? And Michael Saylor says, yes, I have purchased over 1.3 billion in Bitcoin in past months and would be happy to share my playbook with you offline from one rocket scientist to another. And as you can see on the date on the screenshot, it was the 20th December 2020, and it was far long ago, but I don't know if they settled this down, but still, Musk tried to settle it with Bitcoin in Tesla and still did not. It's 1,000 times easier to be bullish when Bitcoin is printing higher highs. Institutional investors are buying in, stock market is trading at an all-time high with the overall sentiment being bullish. Never forget legends who gave you 50,000 plus when Bitcoin was trading at $16,000 while everybody and their mothers were screaming for recession and the market crash with 12,000 target for Bitcoin in their chats, while the S&P 500 was trading at a 3,500 and the overall sentiment was bearish as fuck. Also, I'll probably get crushed for this take, and is it weird that I don't want to risk my Bitcoin speculating on ordinals? I know this is probably a hot take, but it's just how I feel. Not trying to risk my Bitcoin in things I don't necessarily love or understand. I say this fully knowing I may be wrong. Also, Jack Dorsey Cash App drives 90% surge in Q4 and Bitcoin profits to $66 million. Spot Bitcoin ETFs granted access to retail investors, a game changer for crypto adoption. In a major development for the spot Bitcoin exchange traded fund market, financial advisor platform Carson Group, a prominent $30 billion in its platform, has given the green light to 4 of these instruments, reports Bloomberg. The approved spot Bitcoin ETFs offered by BlackRock, Fidelity, Franklin Templeton, and Bitwise are set to become accessible to financial advisors and their clients, marking an important moment for the adoption of cryptocurrencies within the traditional investment circles. Access to platforms that cater to financial advisors and their retail clients is of a huge consequence to the firms behind the Bitcoin ETFs, who are eager to tap into a new audience, as notes Bloomberg, highlighting the strategic importance of such approval for ETF providers. And it is worth noting that BlackRock and Fidelity spot Bitcoin ETFs have emerged as frontrunners in terms of capital inflows, indicating strong investor interest in these offerings, as Franklin Templeton anticipating developing developments like Carson Group's approval has been proactive in positioning its ETFs for success. However, Carson Group's decision did not extend to severe other spot Bitcoin ETF funds, including the ARK21 Shares Bitcoin ETF, which covers over $1.5 billion in assets under management according to data from the block. And the approval from Carson Group could provide a significant boost to the products offered by Franklin Templeton and Bitwise, as which have so far lagged behind their counterparts in terms of performance. As with total trading volume for spot Bitcoin ETFs surpassing $50 billion this week, the market is on the right track for further growth and innovation. And in fact, retail interest picked up again in February after slowing down in January, and analysts at JP Morgan noted that this likely fueled the strong rally in the crypto market this month. And in a note on Thursday led by Nicholas Panikerskolu, JP Morgan analysts illustrated the chart showing the total flow on-chain for smaller and larger wallets, as they explained that smaller wallets typically represent retail investors. And the analysts then made adjustments for inflows into recently launched spot Bitcoin ETFs, clarifying that Bitcoin holdings of retail investors moving to these new ETFs technically fall under large institutional wallets, as even if the end investor is retail. After a pause in January, the crypto rally gained momentum in February, they stated. JP Morgan attributed to the resurgence in crypto interest to the upcoming Bitcoin halving in April, as Ethereum's forthcoming major upgrade and the potential introduction of spot Ether exchange-traded funds. Regarding the first two catalysts, the halving and Ethereum's Duncan upgrade, the analysts believe they are already largely factored into the market. As traditional financial institutions increasingly embrace cryptocurrencies and retail investors seek exposure to digital assets, as the approval of spot Bitcoin ETFs by platforms like Carson Group signals a broader acceptance of blockchain-based assets within the investment landscape, as this development underscores the evolving dynamics of the financial markets and the growing influence of digital currencies in shaping investment strategies. Next up we go. Galaxy Digital CEO Mike Novogratz predicts ETFs will drive Bitcoin adoption. Mike Novogratz, CEO of Galaxy Digital, recently shared his insights on Bitcoin's future and the role of exchange-traded funds in boosting retail demand for digital assets. During an interview with Forbes, Novogratz highlighted the significant impact of the traditional finance in driving Bitcoin's next growth phase, as his optimism follows the U.S. Securities and Exchange Commission's approval of the first U.S.-listed spot Bitcoin ETFs, and a move he believes could mark the beginning of a new era for institutional and retail engagement in the cryptocurrency sector. And ETFs are anticipated to play a crucial role in attracting a broader investor base to Bitcoin and other cryptocurrencies by offering easier access and a familiar investment vehicle for traditional investors, as this development is expected to mitigate some of the liquidity and volatility issues that have previously discouraged more conservative investors from entering the crypto market. And despite a positive development surrounding ETFs, Novogratz expressed concerns over ongoing regulatory uncertainties that could overshadow the industry future, and he criticized the SEC's regulatory approach, calling for a more coherent and supportive legislative framework to encourage innovation and ensure stability in the crypto space. Novogratz remains confident in Bitcoin's potential as a store of value, often comparing it to the gold. As in a separate discussions on CNBC, he acknowledged the possibility of price corrections for Bitcoin but maintained an optimistic outlook for the long term, as he emphasized the significant influx of institutional money into the market, especially through the ETFs, as a key factor that could propel Bitcoin's price higher in 2024. That's all the information we got on today's video, and if you're interested in more, don't forget to subscribe, like, and share. See you in the next one, and peace.